Understanding IRS audits, statute of limitations, and tax compliance. Tax compliance is essential for managing your financial obligations, and the IRS ensures this by monitoring tax returns. While most taxpayers will not face an audit, it's important to understand the process, how returns are selected, and the IRS's statute of limitations. IRS audits, types and procedures. Correspondence audits. These audits are conducted by mail and are typically limited to one or two issues of the tax return, such as deductions for charitable contributions. They are the least invasive and are resolved by submitting supporting documents. Often the CAR report, CAWR, is when the information returns come from Social Security for your W-2s, and then the IRS matches that to your tax return. And a lot of these are just because your tax return doesn't match the government documents that you received. And sometimes you don't receive them and forgot to put them on your return. Office audits. These are conducted when you get the big envelope in the mail. They are conducted at the IRS office. These are broader in scope and usually involve small business or individuals with complex financial situations. Often they are items that IRS is using for training as well. For example, if they're looking at people in real estate, they'll pull a whole bunch of real estate returns for audits so that they can train their employees. The taxpayer is asked to bring specific documents for this review, and usually they'll go through your return and they'll look for 3 items that seem to stand out. Often these are things like mileage or just something that looks unusually big compared to the rest of people that file that type of expense. Field audits. This is the most thorough audit. These are where IRS agents visit a taxpayer's place of business or their home. These audits involve a detailed examination of the taxpayer's financial records and can take several months or even years to complete. Many companies, such as General Motors, Ford, GE, they have a full staff of IRS agents that actually have offices and stay at the corporate headquarters of these large companies. How are these returns selected? IRS uses a variety of methods to identify which returns should be audited. Key methods are discriminant function. It's a DIF score, a computer system that assigns a score to each tax return based on a likelihood of errors or underreporting. The higher the score, the more likely it is the return will be audited. Information matching. This is part of the CAR report we talked about before. The IRS cross-checks information submitted by third parties such as banks, employers, and investment firms with the taxpayer's return. Any discrepancies can trigger an audit. And like we said before, these are usually just a paper return that goes out and says, please explain. Document perfection program. This program identifies tax returns with mathematical or clerical errors, prompting an audit. Most likely, this would not be considered an audit. It's just a letter that says, hey, your math is wrong. Nowadays, the vast majority of people are electronically filing, and this is very rare. Also, we should see in the future, the IRS is creating programs to use AI and advanced computer methods to, in particular, they were looking at people that are hiding money or hiding money offshore. But this easily, you could see, could target a great number of people by using AI instead. IRS also targets certain industries, specific types of transaction, and individuals with unusual deductions or high incomes. Increasingly, the likelihood of audits in these categories. Statute of limitations on tax returns. The IRS has a statute of limitations for auditing tax returns, which generally lasts 3 years from the date the tax return is filed. So, as you know, you also can get an extension to file. So it creates a decision on, do you want to actually file on the due date, or do you want to extend your statute of limitations? It also can be extended based on if you don't pay your bill. But however, this period can be extended in specific situations. 6-year limit. If a taxpayer omits income exceeding 25% of what they reported, the IRS can audit up to 6 years from the filing date. No limit. If fraud is involved or the taxpayer fails to file a return, there's no statute of limitation. IRS can audit indefinitely. Taxpayers should retain their tax returns and supporting documents for at least 3 to 6 years in the case of an audit. What happens after an audit? Once the audit is completed, the IRS will propose adjustments to the taxpayer's return if necessary. These are three possible outcomes: agreement, disagreement, further dispute. A taxpayer agrees an agreement. The taxpayer agrees to the changes, signs the form, and pays an additional tax owed, and you are done. Disagreement. If that taxpayer disputes IRS findings, they can request an appeals conference. They can also first speak with the audit manager. The IRS will then send a 30-day letter giving the taxpayer 30 days to resolve the issue. Further disputes after appeals can be, if the disagreement continues, the IRS sends a 90-day letter which allows the taxpayer to either pay the tax or take the case to U.S. tax court without first paying the disputed amount. Taxpayers also have the option to file U.S. District Court or U.S. Court of Federal Claims after paying the tax and requesting a refund, which sometimes the amount is so great that this becomes not a viable option for many people because they cannot come up with the funds. Key tax compliant deadlines. Tax returns for individuals generally due April 15th with automatic extensions available. However, even if you file an extension, taxes owed must still be paid by April 15th to avoid penalties and interest. Again, this is for 1040s or 1120s. This gets people in trouble all the time. They think the extension means they don't have to pay, but you have to pay. Somehow you have to figure out how much you think you owe or approximate and overpay, but they will charge you interest and penalty for not paying everything. Failure to file a return by the due date or extended deadline can result in penalties up to 5% of the unpaid tax for each month the return is late, up to 25%. This is substantially lowered if you file your return on time. That's why even if you can't pay, it's still important that you file your tax return or at least file an extension. Here is your rights as a taxpayer. You'll get this if you get audited, and it's a publication. In fact, when you get audited, the auditor is required to hand you this document. See, it says this publication explains your rights as a taxpayer and the processes of examination, appeal, collections, and refunds. So, as you see, you have the right to be informed. Taxpayers have the right to know what they need to do to comply with the tax laws. So, you can't just come in there and be railroaded through the system. Here, we'll go left and right here. So, you have the right to finality. Taxpayers have the right to know the maximum amount of time they have to challenge the IRS position. So usually the IRS be a pretty good job at this. But the one thing the IRS is bad at is they often run out of time, and they basically will strong arm you and force you to sign the sheet of paper that extends the audit period. And basically what they do is they say, look, I need more time. Either sign this form to extend the audit period, or I'm just going to say you owe a boatload of money and then you can appeal, which is kind of unfair, especially with how slow the IRS is right now. So you have a right to quality service. Taxpayers have a right to receive prompt, courteous, and professional assistance. They have a right to privacy. So your IRS auditor shouldn't be talking about what's going on with all your friends, because you'd be surprised at where your friends of a friend have a friend who is an IRS agent, and especially if you're in a community, say, of, I don't know, 250,000 people in your town, word gets out. You have the right to pay no more than the correct amount. So if you get audited, if they find something and you're in your favor, you should also get that changed. So the IRS agent should, if they see, you should be able to have them just fix it for you. You have the right to challenge their position. So the IRS will attempt to do their best job, but if you don't agree, you can go to their manager or you can appeal. These kind of 7 and 8 kind of go together, but you have a right to retain. So you have a right to have a CPA work with you, and many people are so nervous or scared of the IRS that they don't even go to the audit. They just have the CPA represent for them. Again, this is a big one. You have a right to appeal. and you have a right to a fair and just tax system. Taxpayers have a right to expect the tax system to consider facts and circumstances. So one nice thing the IRS does is they'll look at the facts and circumstances to make a decision, as opposed to a lot of the state agencies are just it's the letter of the law. But especially if you have a reasonable agent, they'll look at the facts and circumstances and try to make a good decision for you. This outlines your examinations, appeals, collections, and refunds. This is examinations. It kind of goes over what talks about how many examinations are hired by mail, the interview process. Repeat: if we examine your return for the same items in either of the 2 previous years and propose no change to tax code, please contact us as soon as possible so we can see if we should discontinue exams. So they also are expected, if you go under exam, you shouldn't be examined again in the next 5 years. It's just in the when we were worried about communism, etc., and then in the Vietnam War, we were examining people. Every single year they were getting examined. Congress thought that was unfair. Again, innocent spouse. So if you have a spouse that was doing, selling cocaine on the streets and you had no idea, then you can file this and say, hey, I had no idea this was going on. You have a taxpayer advocate service, which used to be outstanding. You could call them and they would help you right away. Now they've become, currently in 2024, they're almost useless. You can file claims for refunds here. May file a claim for refund if you think you paid too much. You must generally file the claim in 3 years. So this always stinks, if you later find out that you made a mistake. But what really comes into play is if you didn't file your tax return.
It's 11 o'clock.
And then you're trying to file and get a refund. But there you go.